Imagine unlocking the secrets of a document that can tell you the health of a business at a glance. Welcome to the world of financial literacy, a place where numbers tell a story, where figures speak volumes about the vitality and vigor of a business. A place where the often intimidating lingo of finance becomes as familiar and friendly as your morning coffee. At the heart of this narrative lies the income statement, a powerful tool that unveils the intricate layers of a business's financial performance. The income statement, also known as the profit and loss statement, is not just a document, it's a mirror reflecting the financial health of a business. It presents a comprehensive picture of revenue, costs, and profits, helping stakeholders make informed decisions. Understanding an income statement is like having a compass in the vast ocean of business finance. It guides you towards profitable shores, while helping you steer clear of treacherous waters. But the power of financial literacy extends beyond the boardroom. It permeates into our personal lives, helping us navigate our personal finances with confidence and clarity. It empowers us to take control of our financial destiny, to understand the implications of our monetary decisions, and to build a secure future. Understanding the income statement is like learning a new language, a language of numbers and ratios, of profits and losses. It's an essential skill, not just for the business owner or the aspiring entrepreneur, but for anyone who wants to understand the financial world around them. It's about making sense of the numbers that govern our lives, about understanding the rhythm and rhyme of money. So, are you ready to dive into this fascinating world? Are you ready to unravel the layers of the income statement, to decipher its codes, and to unlock its secrets? Are you ready to empower yourself with the knowledge and insights that can transform the way you view business and personal finance? Embark on this journey to uncover the mysteries of the income statement. Picture a map that guides you through the financial landscape of any business. This map, my friends, is known as the income statement, an essential tool that paints a vivid picture of a company's profitability during a specific period. The income statement, also known as a profit and loss statement, is not just a mere document. It's an intriguing story that unfolds the financial performance of a business. It provides a panoramic view of the money that flows in, the expenses incurred, and the net result of these transactions. Simply put, it's a clear snapshot of how a business is performing financially. Now let's take a quick tour of the main components of an income statement. These are the key elements that make up the story. First, we have revenue, the lifeblood of any business. This is the total amount of money generated from the sale of goods or services. It sets the stage for the rest of the income statement. Next, we encounter the cost of goods sold, often abbreviated as COGS. This represents the direct costs associated with producing the goods sold by a company. When we subtract the cost of goods sold from the revenue, we get the gross profit. This figure gives us an idea of how efficiently a business is using its resources to produce and sell its goods or services. Moving further down, we find the operating expenses. These are the costs associated with running the business on a day-to-day basis. They include things like salaries, rent, and utilities. Finally, at the bottom of the statement, we find the net income. This is the final tally, the bottom line. It's the amount left over after all the costs have been subtracted from the revenue. The income statement is that map, a treasure map leading to the wealth of knowledge about a business. It provides an insightful journey through the financial terrain, helping us understand where a business is heading financially. So buckle up, because we're about to delve deeper into each of these components in the upcoming scenes. Stay tuned. Imagine a river, flowing with wealth, nourishing the land of business. That river is revenue. The core of any business is its revenue, the total amount of money brought in from selling goods or services. It is the building block of an income statement, the lifeline that keeps businesses afloat and thriving. But what exactly is it? How is it calculated? And what different forms can it take? Think of revenue as the gross earnings of a business, the total income before any costs or expenses are deducted. It's like the total ticket sales for a concert before the costs of the venue, the performers, and the promotional expenses are taken into account. Calculating revenue seems simple, right? You multiply the price of your product or service by the number of units sold. But remember, not all revenue is created equal. There are different forms of revenue, each with its own characteristics and implications for the business. The primary form of revenue is operating revenue. This is the income generated from a company's main business activities. If you run a bakery, for instance, your operating revenue comes from selling bread and pastries. But then there's also non-operating revenue. This is income that comes from secondary activities, not directly related to a company's main line of business. For our bakery, non-operating revenue might come from renting out a portion of the bakery space to another business or from investments. Both forms of revenue are crucial, but it's important to distinguish between them. Why? Because operating revenue reflects the core business operations, the heart of what the company does. It's the most sustainable and predictable form of income. Non-operating revenue, while beneficial, can be more sporadic and less reliable. So, revenue, in all its forms, is the lifeblood of a business. It's the money that flows in, allowing a company to cover costs, invest in growth, and generate profits. It's the starting point of the income statement, setting the stage for all the costs, expenses, and profits that follow. Revenue, the lifeblood of a business, sets the stage for the income statement. Now visualize a scale, balancing the cost and the profit. That scale is the cost of goods sold. This scale, the cost of goods sold or COGS, is a crucial factor in determining the financial health of a business. It's not just a number on a spreadsheet, it's the total cost of all the materials and labor directly involved in producing the goods or services sold by a business. Let's break it down a bit. Imagine you own a bakery. The cost of goods sold would include the flour, sugar, and eggs you need to make your delicious pastries, as well as the wages of the bakers. However, it wouldn't include the cost of the electricity to light up your store, or the salary of the person who serves the pastries. Those are indirect costs, part of your operating expenses, which we'll discuss in the next scene. Now, why is the cost of goods sold so important? It's because it directly impacts your gross profit. Gross profit is what's left after you subtract the cost of goods sold from your revenue. Let's go back to our bakery example. If you sell a pastry for $5 and it costs you $2 to make it, your gross profit is $3. But what if the cost of flour goes up and now it costs you $3 to make that pastry? Your gross profit drops to $2. You see, the relationship between the cost of goods sold and revenue is a delicate dance. It's a balancing act that every business must master. Because the lower your cost of goods sold, the higher your gross profit. And the higher your gross profit, the more money you have to cover your operating expenses and generate net income. Understanding the cost of goods sold and its impact on gross profit is essential for making strategic decisions about pricing, sourcing materials, and managing labor. It's about more than just numbers. It's about the very survival and growth of your business. The balance between the cost of goods sold and revenue gives birth to the gross profit. Envision a beast that devours a part of your profit. This beast is the operating expenses. Now, let's delve into the deep and murky waters of operating expenses. They are the costs that a company incurs as part of its day-to-day operations. Think of things like salaries, utilities, rent, and office supplies. These aren't costs associated with creating the product or service your business offers. Instead, they are the expenses needed to keep the business running, to keep the lights on, so to speak. Operating expenses are like a necessary evil. They eat up a portion of your revenue, but without them, your business simply cannot function. It's a bit like paying taxes. No one likes doing it, but it's essential for the functioning of society. Now let's break down the types of operating expenses. First, there are fixed expenses. These are costs that don't change significantly over time. Rent or mortgage payments for your business premises, for instance, are fixed expenses. They're predictable and you can budget for them easily. Then, there are variable expenses. These costs fluctuate depending on the level of business activity. Think of things like shipping costs or sales commissions. The more business you do, the higher these costs will be. And finally, we have semi-variable expenses. These are a mix of fixed and variable expenses. For example, your electricity bill may have a fixed component that you pay regardless of how much power you use. But the more power you use, the higher your bill will be. It's crucial to understand how these expenses impact your net income. The higher your operating expenses, the lower your net income will be. Hence, managing these costs effectively is key to maximizing your profits. But remember, while it's important to keep operating expenses in check, you must also ensure that cost cuts don't impair the ability of your business to operate effectively and efficiently. After all, you can't run a business without spending some money. So, there you have it. Operating expenses, the beast that needs to be tamed for a business to thrive. Finally, imagine a treasure chest at the end of your journey. That treasure chest is the net income. Net income, so often referred to as the bottom line, is much like the grand finale at the end of an elaborate fireworks show. It's the culmination of all the financial activities, decisions, and operations that a business undertakes. Whether you're a small bakery in a quaint town or a colossal tech giant scaling the globe, net income is the definitive measure of your success. Net income is the result of a simple yet profound mathematical equation. It's the total revenue of a business minus all its expenses, which include the cost of goods sold, operating expenses, and taxes. What remains is the net income, the profit that the business has earned after deducting all expenses. Now, why is net income often referred to as the bottom line? Picture an income statement, a document that lays out all the financial activities of a business. The revenue is at the top, hence called the top line, while the net income, the final figure after all deductions, sits at the bottom, hence the bottom line. But the significance of net income extends beyond its position on an income statement. It is the ultimate measure of a business's profitability. It is the figure that investors, lenders, and shareholders scrutinize when they decide whether to invest in a business or lend it money. It is the number that determines whether a business is thriving or merely surviving. Net income is not just a number, it is a story of how a business manages its resources, how it navigates the tides of the market, how it makes decisions that impact its profitability. It tells us whether the business is sailing smoothly or struggling against the wind. It is a snapshot of the business's financial health at a particular point in time. So the next time you look at an income statement, remember that the net income, the figure at the bottom, is not just a number. It's the culmination of a journey, the result of countless decisions, the reflection of a business's financial strength. Net income, the ultimate treasure that reflects the financial health of a business. Now put all these pieces together, and you have a story, the story of a business. Picture a jigsaw puzzle. Each piece represents a component of the income statement. Revenue, the lifeline of the business, forms the corners. This is the total income from goods sold or services rendered, essentially the starting point of your story. Next, we slot in the cost of goods sold. Think of this as the puzzle's edges. It outlines the direct cost related to the production of the goods sold by the company. It shapes the story, giving it dimension. Then we fill in the middle with operating expenses, the necessary evil. These are the day-to-day costs of running a business, like salaries, rent, and utilities. It's the heart of the puzzle, the intricate details that bring the picture to life. Finally, we reach the bottom line, the net income. This is the last piece of the puzzle, completing the picture. It's the profit after all expenses have been deducted from revenue. It's the climax of the story, telling us whether the business is sailing smooth or weathering a storm. The beauty of an income statement is how these pieces interact. They don't exist in isolation. Revenue feeds into costs, costs shape expenses, and expenses determine net income. It's a delicate dance, a balancing act that reveals the financial health of a business. It tells you if a business is profitable or not. It shows you where money is coming in and where it's going out. It highlights the efficiency of operations, the sustainability of the business model, and the potential for growth. It's not just numbers on a page, it's a narrative, a story in its own right. And just like any good story, it has its highs and lows, its triumphs and challenges. It has its heroes and villains, its victories and defeats. But most importantly, it has its lessons. It teaches us about success and failure, about risk and reward, about the art of doing business. Mastering the income statement empowers you to read the story of any business. So, what are the secrets you've unlocked today? Well, we've journeyed through the riveting world of income statements, unraveling its mysteries. You've learned that understanding an income statement is not just a need, but a powerful tool that helps you peek into a business's financial health. We've explored the lifeline of any business, the revenue, and how it sets the pace for everything else. Then we delved into the cost of goods sold and gross profit, highlighting their delicate balancing act. We've grappled with operating expenses, those necessary evils, and how they impact your net income. And speaking of net income, we've discovered why it truly is the bottom line, the final verdict on a business's profitability. Remember, an income statement is more than just numbers. It's the story of your business, a narrative that reveals its strengths, weaknesses, and opportunities. With this knowledge, you are now equipped to navigate the financial landscape of any business.